So we have US ADP Employment Change coming out of the United States, and this is a private report where ADP stands for Advanced Data Processing, and what happens is there is an organization that processes a lot of payrolls for a lot of merchants, and it covers about 20% of the whole employment situation in the United States. And they release this report 2 days before the non-farm payroll, and it's supposed to be a leading indicator of what the non-farm payroll will do. And sometimes it's predicted it well, other times it's been completely off base. Normally I would skip this report, I wouldn't even wake up for it, but I figured, we have this report, and then at 8:30 we have a Canadian current account, which could give a nice after spike trade. So I thought, okay, we'll just do these two, but don't be surprised if, let's say, next month or the months following, next month, if there's no other reports at 8:30 or close to it, I'm not just simply going to trade it. I mean, simply because the deviations on this report are relatively rare. I mean, in the last 6 months, we got a trade on it, I think just back in January, and other than that, there's been no trades all the time. There's pretty much no opportunities for after spikes. It's extremely risky. Even when a trigger is hit, usually for a trigger is hit, the move is very, very quick. So we gotta be in and out. It's extremely important to use slippage control here. With my triggers, I'll be using bounds of 5 pips on GBP USD on a Wanda, and on MB trading I have to use limit orders. As you can see here, we have regular 10 pips limit triggers and conservative 20 pips limit triggers. The regular 10 pips limit triggers are plus 65 or minus 65, so if the report comes out at 180 or at 50 or below, 180 or above or 50 or below, it would generate a signal. Expectations are 115K, and on the conservative triggers we have plus 135 and minus 135. So if the report comes out at 250 or above, or minus 20 or more negative, it would then trigger the conservative limit triggers. As I said, I'll be using GBP USD on my Wanda account, and and 10 pips limit triggers on the MB trading account there. And regarding the level, the prices trading are about 97.60 right now on the GBP USD. I wouldn't be surprised. I mean, it could go down to about 97.35 and then quickly retrace on the GBP USD about 20-25 pips. So we got to count on that. I'm just going to use 10 pips limit triggers. As soon as I see spike ending, I'm probably just going to exit with a quick scalp profit, and I'm very doubtful that we're going to have after spike trades. Maybe if the deviation is big enough and there's a sufficient retracement, then maybe, only maybe. On the upper side we have a little bit more room. I think 97.90, another 25-30 pips or something on the GBP USD pair. So we'll just see what happens there. 20 seconds. 15 seconds, 10 seconds. Okay, no trade came out at 97,000, very close to expectations. Revision of previous number was 61,000 versus 64,000. This is definitely no trade. I saw 20 pip spread on Owanda on this one, so I just discontinued the weapon anyway. I like to do that as, sometimes I make this last time decision on these small shitty indicators, especially when the price is too close to a strong level such as 35.40 and we only have a room for about 15-20 pips. So this is a no trade. Let me go off air for a brief moment. Hey guys, well, let me go ahead prepare a couple of things for the Canadian report.